It is Wednesday, November 27th. It's a little different setup, okay? I got the camera to my right. It's propped up on pillows. I got my laptop in front of me, my MacBook Pro, and I got my my iPad Pro to the left of me. So I've got a little setup, so please bear with me. It is the Wednesday before Thanksgiving. Hopefully you are spending it with family, loved ones, whatever, but I hope you're not, dying for my podcast, for my company, because I'm probably not the best company just because I'm still tired. The 16-hour, 14, whatever, how many hours I spent in the car, it was rough on Tuesday. It wasn't horrible. The traffic was really good. I drove right through. What's amazing to me is the new full self-driving that Tesla has. It's phenomenal. Let me just I'll say it again. On the highway, this was my first highway trip in that new car. And full self-driving was phenomenal. At one point, I turned it on while I was on the highway. It guided me to the charging station, and then I found a parking space. It backed into the charging station. I got out and I plugged in the charger. I didn't have to do a damn thing. Got me off the highway, pulled off to the right, pulled into the gas station, found the chargers through the parking lot, and went right to them. I found a parking space, hit it on the screen, boom, it was done. It was so good, and it drives like a human. One time it messed up trying to go into the HOV lanes, and I didn't have the paid for HOV lanes, and it was shut off. There was barricades there, and it tried to go through, but so you can't sleep on it, but it really is that good. So Tesla, kind of a bull on Tesla right now, to be honest with you. Coming here on Wednesday, just because there's a couple of things. The first thing is the contest. It's a contest to win 1 free year of Trendspider. The only place that you can comment to enter is on this video. Okay, go to my YouTube channel, youtube.com/@dailystockpick. Okay, it's this video with this thumbnail. Win 1 free year. If you comment on any other video, you're not entered. If you comment on any other platform, like Twitter, like Instagram, like Substack, if you comment anywhere else, you are not entered. It's just this one. And as of this morning, you have like a 1 in 150 chance of winning because there's not that many comments. It will shut down at noontime today. Noon today. Trendspider will be picking a winner. I'll be going live on Substack and probably on YouTube as well. So set your alerts. I'll announce the winner. It'll be a short little show today after the market closes, but I'll announce the winner today. So it'll be done. It'll be over. Thank you, everybody, for participating. Thank you to everybody new who signed up. But yeah, you still have a really good chance of actually winning. Just enter. If you've been thinking about Trendspider, just go and enter. Now, let's talk about the markets, because today, it's Wednesday before Thanksgiving. If you haven't been through the markets in this kind of area, today and Friday are just super light volume days. There shouldn't be anything out of the ordinary. We had earnings yesterday from DELL, from HPQ, and others. But you shouldn't have anything crazy that happens today unless we see some catalyst event. If you haven't been through the markets on days like today where it's light volume, unless you have a catalyst like earnings or something like that, the market's just, you do have inflation numbers today. I don't expect the market to take off or do anything crazy. So treat it like a Friday. And I guess inflation numbers came down because the market came down a little bit. So maybe inflation hit it. I don't know. I'm not worried about it. If you're making any changes in your portfolio today, it's long term. Okay? It's not short term. And I will tell you, knock me down off of diamond hands, because I made some moves while I was, I think it was right after I got home. It was probably Tuesday morning. Or maybe, I think it was while I was driving. I got rid of my MSTX. And the reason I got rid of MSTX is not because I don't believe in Microstrategy. I did get rid of my MSTX. Why did I get rid of my MSTX while I was driving? Well, if you look at this, we lost confirmation. So while the algorithm hasn't gotten you out of MSTX, It's a leveraged ETF, double time. So I don't want to sit in a leveraged ETF while it's losing confirmation. So I did get out at about 105. I took a small profit. You're trading at 83 right now. In pre-market, it's up to 96, so you're up 16%. I can always buy back in if I feel like it's going for a run again, but I'm not going to do it on a Wednesday before a freaking holiday. That's the key. So, again, you have to manage these positions correctly. Now, you can call me that I'm no longer diamond hands, but I still have my MicroStrategy. And yes, MicroStrategy has lost confirmation. It is up to 380 in pre-market, and I very well may get out of this one. This is up 7%. This may get me out because right now 406 is confirmation. And I might just want to let it cool off. Again, this is why I purchase it in the retirement account so I can make these kinds of moves. Now, if you want to short, remember, if you want to short Bitcoin, SBIT. SBIT is the ProShares Ultra Short Bitcoin. Got you in at 1260 to 1261. You're at 1326 right now. And Bitcoin may be going down. It almost hit 100,000 and it pulled right back in. So we can go back. Let's see. We're going to go Bitcoin and crypto. And then we're going to look at BTS versus USD. And this is it. So you can see the algorithm got you out of Bitcoin here on November 26th, where it was trading at 97,000. Hasn't gotten you back in. So you can trade the 4-hour algorithm on this Bitcoin, and it is up, like the tilde symbol, like the up arrow, and then BTC USD. If you're in Trendspider. If you're new to Trendspider, that's how you look at it in Trendspider. Okay, and you can trade the algorithm on this. Now, over 2 years, 5.6 months, you make 50% versus buying and holding 38%. So buying the dips on these things actually works. It's pretty good. So again, you have to understand what you're holding. You have to understand where you're holding it. The charts take emotions out of these things. And you can use it on any stock. You can use it on any crypto. Anything that they support with the symbols, you can use it on. In fact, QQQ, it just got you back in at 508. So again, this is one where you make 67% if you use the algorithm, and it's 19 over 24 and a half months. It's 19 positions. You win 58% of the time, but you don't time the absolute bottom and you don't time the absolute top. So it plays in this middle ground. So in a bullish sentiment, as long as this one's continuing to go up, you're going to make money. You're not going to make as much as buying and holding because it's just continuing to go up. So sometimes you will, sometimes you won't. Tesla is a good example. It's in an upward fashion, but it's you make better decisions over there. So again, you want to comment on this one, get Trendspider. The Black Friday sale, by the way, is still going on. I'm not going to go over it here too much. But just make sure that you've got 2 more days to save 65%. After that, you won't save, and enter to win it for free. So if you do have Trendspider, and we did have quite a bit of people that signed up, I'm going to include this in the newsletter. Okay, the newsletter is completely free. Go over here to the link tree. It's down below. You can see the link. And it's like the 5th one, Daily Stock Pick newsletter. This is more times than not, this is free, okay? It's only paid over the weekend, but I'll include this particular link. This is a recent Power Gap Russell 1000 scanner. So it looks for power gaps, and look at the change. Archer up 24%, BBIO up 15%. These are small cap stocks. SBH, it's got Rocket Lab in there for 3%. ONB, which is up 6%, SDGR, which is up 6%. So this looks for recent power gaps, okay? And you can import this scanner into your Trendspider account. I'm going to include it in the newsletter. So if you signed up for Trendspider, you should be signed up for my newsletter. The biggest stock movers of the day, there's a couple. Ambarella in pre-market trade. This is an Edge AI semiconductor. Again, it's up 23%. Iris Energy jumped 7.9% after the Bitcoin mining high-performance computing company said it may be able to start distributions to investors in 2025. Iris Energy, IREN is the symbol. Urban Outfitters is up 7.2% after strong. You're seeing this divergence between the companies that beat and raise and the companies that just have some problems. And Dell is one. Shares fell 13% in pre-market, and I did include a look at Dell. I thought Dell was going to do perfectly fine because I thought some of the SMCI stuff was coming over, but they had a weakness. Their revenue fell below estimates. Dell forecast fourth quarter revenue between $24 billion and $25 billion versus consensus estimate at the high end of 25. You're going to get killed on that. And again, Dell is down. For the period ending November 1st, Dell said it earned an adjusted $2.15 per share. Okay, a consensus of analysts expected them to make $2.05. So they beat on earnings per share. Client Solutions Group generated $12.13 billion in revenue, down 1.2%. Sales from commercial PCs rose 3.1% year over year. I do believe that Dell in particular, it's still a strong buy in the quant. The valuation's a little bit stretched. I think this is a buy the dip opportunity. But what I would do is not buy today. Don't buy the dip today. It's down 11%. It dipped as much as 17%. The average price target is still $148. In pre-market, you're trading at $125. Okay? The average price target is still $148. Are analysts going to start bringing their price target down? I don't think so. I think they're going to continue. This is just one company that will continue to go up. Look, September, 144. Mizuho initiated coverage in September at 135. So you're seeing quite a bit of companies. The target price here is 150. So I do think that you're going to see this particular company move up. I think it's a buy the dip opportunity. I haven't looked into the earnings all that much, but I liked it. HPQ, same thing. This is the same company. It's a computer company that sells computer equipment. And so I thought this one was going to go up. It fell 9% after disappointing quarterly sales. So have we seen the peak of this semiconductor and some of the semiconductor and data center stuff? Sorry, my mind is still a little weird. I don't know. Autodesk fell 8%. Workday fell 10%. Again, earnings related. Gas shares were down 12% as the company warned. So you're seeing some companies, these are catalyst down. Catalyst down. Those are the biggest movers of the day. Now, I'm going to talk my own book because that's what I do on this podcast. Apple. iOS to pick up pace versus Android in 2025. Yeah. I mean, Apple, in my mind, Apple is still a safe bet. Now, I will say I am looking at selling a very large amount of my Apple by year end for tax purposes. And yes, I will pay taxes. I will be like Elon. It will be the biggest tax bill I've ever paid in my life. But I'm looking at the potential of doing that. And it's not because I think Apple is weak. I think Apple is it's probably not the greatest position to save my money. Right now, the average price target, $244. That's only a 4% upside. So selling at $235, $233 over that $230 price point is probably not that bad of an idea, to be honest with you. And so I'm looking at that one and I'm saying, okay, we're up here. We've been hovering around this $228, $230 level for quite a while. And in my mind, I think maybe there's an opportunity to sell here, maybe buy back at the beginning of the year, because I will I still need to buy back a little bit of shares and maybe buy back and just, again, play in that game of selling higher and buying lower. Well, as long as it continues to flutter around this 228 and I can sell as it starts going down. So that's my play on Apple. In the newsletter too, I'm going to put in the top quant stocks, okay? The large cap quant stocks from Seeking Alpha. You don't know about Seeking Alpha, you can go over here. You can look up any stock that you want. The first one is Amazon. It's a strong buy. It's 4.98 out of 5 on the quant scale. Okay, the only ding against this one is the valuation. But I think with their growth, the valuation makes sense. The PEG ratio is 1.75. That's low enough for me to say, okay, we're going to continue to grow. The average Wall Street price target on Amazon is $234. That's a 12% upside from where you're trading today. Remember, we were held down by Jeff Bezos selling And now we're seeing this one go. Now you see that red and the green trend lines? That's on the weekly that I drew before. I still think that Amazon is one of your best. This is the support level. Where are we down at the support? The actual resistance, you can see that one going through there. I think that one, the green line represents the old resistance, which should turn into support, or some. That's the old support, which should turn into some resistance. So up there, you're trading at the 220 level and you're 208. Now that's the top stock. Your second large cap stock is UAL. Okay, this is United Airlines. The airlines have been going nuts. Look at this chart. The algorithm got you in down here at 42. Okay, the algorithm got you in at 42. You're at 96. This was just in August. You've doubled your money since August. We're going to take this because this was running at 65%. We're going to take this and we're going to put this up here. 126% gain. Crazy, crazy good. So yeah, again, that's the second. They still think they've got more. Another one, SYF. I think this is an alpha pick. And SYF, this one, look, the algorithm got you in here at 47. You're at 67 right now. That's a great, great stock. And how do you get this? Well, this is part of Seeking Alpha Premium. Okay, if you want premium, the Quant comes with it. You get $90 off. Remember, there's a Black Friday sale, so it doesn't go on forever. Get the normal discount that I get you is $30. It's 3 times the savings. So it gets you 1 full year of premium. Now, say you heard me talk about Alpha Picks. Alpha Picks is the portfolio that I've put a ton of money into. Okay, something like $140,000, $130,000, something like that is my portfolio on Alpha Picks. This one, the reason why I do it is because of this performance. It's 2 stocks, one on the 1st, one on the 15th. We're going to get one on the 2nd in December because the 1st is Sunday. But we'll get one on the 1st and one on the 15th. You just buy it. And then they tell you when to sell. And so they manage the portfolio for you. There is a video on my YouTube channel where I said, hey, and this was just a few weeks ago, maybe a couple months ago. I don't know. I think it was at the end of October that I wound up buying $50,000 worth of the entire portfolio. And I'm way up on that portfolio, like 10, 15%, something like that. It's a monster portfolio. During the time when the S&P was up 58%, this Alpha Picks is up 185%. Okay, and you save $140 off. Now say, oh my God, that's great. You got me Seeking Alpha Premium and you got me Alpha Picks. I need to sign up for them separately. Nope. There's a Black Friday sale on Alpha Picks and Premium. And you save $289. You save $289. So I'll post the large cap quant stocks, the top quant stocks, in my newsletter. But remember, this is a limited time offer. Now let's go into another large cap tech, NVDA. Okay, nothing good happens below the 21 day. This is a daily chart, and that's the 21 day. Now on my chart, if I go and look at NVIDIA, we're going to look at a 4 hour because the 4 hour, I like the 4 hour better. It responds a little bit better. You can see the algorithm got you out of NVIDIA. Right here at 146, you're trading at 136. So the algorithm knew something was up right before earnings and said, you know what, we're not going to do that. Look at the last earnings where it dipped down. This is a buy the dip opportunity. I think NVIDIA is a buy the dip opportunity. Why do I think that? Well, again, nothing good happens under the 21 day. I would argue if you look at the 21 day as the one play, it's the yellow line on here on my chart is the 21 day right there. And if you play under the 21 day and you're long-term focused, it's been a time to buy. It's been a time to buy. And if you look at a weekly, you can see the MACD is still super high. The RSI is 52. So you're in no man's land and it's going down. And the last couple of times when you got below that 21 day, you can just look at it and see, I do think that you have opportunity long-term. So I do think that you have opportunity long-term. And then our favorite analyst, Shai, why do I still believe NVIDIA will hit 200 before it hits 100? Google ordered 400K of GB200 chips, valued at $10 billion. Microsoft purchased 60K of GB200 chips, worth $2 billion. Okay, Meta acquired 360K of GB200 chips for $8 billion. Demand for NVIDIA's Blackwell chips is absolutely insane, and they're starting to deliver it next year. So NVIDIA, in my mind, this is a no-brainer. It's an opportunity when the algorithm gets you back in, start buying. The algorithm makes you 604% over 24 and a half months. That's great. Buying and holding makes you 802% over 24 and a half months. Okay, 18 positions, you win 67% of the time. When the algorithm gets you back in, you don't want to time the bottom. Maybe you don't want to buy today. Maybe you want to buy, when the algorithm gets you in. Just remember, you can buy whenever you want. Just have a strategy that works, and that's what Trendspider gives me, a strategy. Okay, social request. Bullish Bites, looking forward to it. Thoughts on RCAT or JOBY? You pick. RCAT is one that just got an Army contract, and I think both of these are very speculative at best. And so RCAT, the algorithm makes you 833% over the last 24 months. Buying and holding makes you 561%. So trading this one has made sense in the 4-hour algorithm. So what I would do is I would wait for the algorithm to get you out, because this one has gone up. If we look at this one from a weekly perspective, this is a shit show. This is an absolute shit show. And the reason it's a shit show is they've done so many reverse splits in order to keep their listing, and they're finally showing some promise. And it's because of that Army contract. And if we go to financials and we look at it, at least they have some revenues. And then we go look at JOBY. Okay, JOBY, if we look at their financials, they don't have revenues. I mean, that's the problem with JOBY, is there's just no revenues there to actually, support that. So if I had to pick one, I think I'd pick RCAT, because they have the contract, they have the momentum. We can look at the rating, the Quant rating, it's a hold. And the valuation, it's a B, but they're not making money. So you can't really put a B on it. You say, okay, they're not making money, but they actually have revenues. Look at their growth. Their revenue growth, 259% year over year. And we can go and look at JOBY with their revenue growth. No, JOBY. I want JOBY. Revenue growth, they're not making revenue. RCAT is making revenue. Now, they're not making earnings, but they're making revenue. And that's where you come into profitability. Their gross profit margin, 16%. Their sector is 50%. And RCAT's number 8 out of 57. Okay? RCAT, the number 1, Zebra. This has a strong buy in the Quant, 4.75. And the valuation's correct. I mean, maybe it's not the same apples to apple kind of thing, but I think from Bullish Bites, I would definitely take RCAT over it. It's just they're both speculative. And I don't think anybody's flying in an effing taxi. In Dubai, I think it's fine that you fly in a taxi, a drone taxi. But I don't think anybody's realistically flying in a drone taxi anytime soon. I think they have them now in Dubai, but I don't think it's like commercially available. I think you can just it's those special flights. But JOBY's just a shit show, and both of them are a shit show. JOBY's one that again, it's just speculation. It's just speculation, and that's the problem that you have, is all of this is just speculative. So would I get into either one of them? Or if I had to pick between the two, I'd probably pick RCAT. Now, scans. We talked about some of the scanners. Amazon gets you in at 207. It's trading at 208 in pre-market, but at 207, you can just buy it. I think if you dip under $200 again, I think you start. I was telling everybody, when you're under 200, you just add that one. Now in the core portfolio, QQQ, this one also has a new buy here. And we can look at it right here. I said right here at 503, we're looking at support. You're trading at 508 in pre-market. The algorithm got you in at 508. So I do think that we're heading towards a bull market here. UNH, this is United Healthcare. This is in the core portfolio. Anything under $600 on United Healthcare, I think you can add it. Again, we dip back down under $600. You had the chance to buy it here at 572. Right, but here, even though the algorithm got you out, I think you just play this one. It's the largest healthcare company. Qualcomm, this is one that has not done really well. The algorithm makes you 12% versus buying and holding is 30%. I think until Apple can figure out how to put a 5G modem that they build into their phones, I think Qualcomm's a buy. Until they can figure it out, because the Apple needs them, every cell phone provider needs them, and I think you're going to start to see a good cell phone cycle, upgrade cycle. Bank of America, it got you in here. If I had the buy alert, it would tell me to add to it right here. Now, do you want to add to it? RSI is a little high. MACD is a little high. But valuation on this one, it's not crazy. Look at the all-time high at 40, almost at 50. Yeah, $50, and you're trading at 47, and it's got this super, super long tail right now. This one, you were buying, hopefully you were buying under 30 on that one. XLY is in the core portfolio. This is the consumer discretionary sector. This includes Tesla. This is the way I have Tesla. $200 was the buy. You're at $220. So in just a couple of months, you've made 10% on a freaking sector. Okay, that's a good buy. You've got FBCG. Hold on one second. Okay. Hold on. Hopefully this doesn't follow me. And if you follow me, okay, I got to edit that out. Dog was crying. She needed a blanket over her. But XLY is one that we have a buy on. This entire list of scans is going to be available on the newsletter. One that I do want to point out, another spider sector, is XLG. I love this ETF. This is the 50 top largest stocks in the S&P 500. So rather than the S&P 500, this is the S&P 50. It's done great for a long term. You can see how well it's done. Now, you're not trading at low levels. These are still high levels. I just continue to think that big gets bigger. And it's not the Mag 7. This is the Mag 50. So I like this one. I like this one a lot. If you have any questions, again, my link tree is right here. You can join me on Linktree. Any other questions, just hit me up. My email's up here on the upper right. So remember, contest is going on right now. Go to my YouTube channel. If you go to my YouTube channel right here and you look at videos, it is this particular one. Win 1 free year of Trendspider. Only enter on that one. I'm shutting it down at noontime. Okay.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.